the board of the San Lorenzo Valley Water District. It's 5:30. Leah, can you take roll?
President Russ,
Here.
Vice President Lane,
Here.
Director Lardade's remote.
Here.
Thank you. Director Smalley
Here.
and Director Foltz is joining us remote.
Here. Okay.
Thank you.
Excellent. All right. Okay. There any changes to the closed session agenda?
No, sir.
Okay, I don't think we have any either. Anybody in the public? Hand raised?
Nobody their hand up.
Okay. And so I guess we will now adjourn to the closed session. Now. Thank you. All right, we're on. We'll reconvene now. The public session, San Lorenzo Valley Water District at 6:30 on July 21st, 2026. Leah, would you please take roll?
President Russ,
Here.
Vice President Lane,
Here.
Director Lardade.
Here.
Director Smalley
Here.
and Director Foltz.
Here.
Thank you.
Bob, we can barely hear you.
Here. Okay, we heard that. All right. Let's see, in the closed session, we do have one action that came out of it, and I will report that when I think it's under new business, when we talk about the general manager contract review.
Oh, you have to do it right now.
I have to do it now?
I think so. I believe you can ask legal.
Gage.
Gage. Can you hear me okay?
Hi, hello everyone. Good afternoon.
Good afternoon to you too.
You do have to make the report out when you return from closed session.
Okay,
Okay.
all right. Okay, the board has voted and granted to the general manager the full compensation amount of 5% of his contract to be retroactively applied to his pay from his date of hire. And that's it for
Vote count.
right now.
Vote count.
Oh, yeah, I guess a vote count too, right, Gage? Okay.
Yes.
Yes, it was a vote of 4-1. And I guess we will be discussing this again in the public session. Is that correct, Gage? And we will have to have another vote for the public session?
You don't have to have a separate vote. You just have to report out on the vote that was taken in closed session, on the action that was taken in closed session, which you've already done.
Okay. All right.
Then I just want to make sure it's clear that the one was myself, and that is also something required to be identified.
Okay, thank you,
Yes.
Bob. And the other four directors voted yes for the 5%. Okay, well, thanks for the clarification. All right, now we're going to move on to any changes in the public agenda?
No, sir.
Nope, okay. I don't, I have none, okay. And any oral communications from outside?
Nobody with their hand up.
No hands up, okay. Then I think we'll move on to the presentation on our COP, I believe.
Yeah, with us we have Mr. Ken Deeker from Del Rio Advisors, who leading the district in our purchase of the what turned out to be the 2026 COPs. And with that, I'll turn it over to Ken.
Can you guys all hear me okay?
Yep, we can. Good to see you again.
Yeah, likewise. All right, so I'm gonna give me a second here to share my screen. All right, can everyone see that?
Yes.
Yes.
Great. So I wanted to report back out as to the sale that we had back in April. So the first thing is I wanted to kind
Did we lose him?
He's frozen. I don't know.
Hold on, Ken.
everything related to the municipal market.
Oh.
Every
Okay.
Thursday, they publish what's called the Bond Buyer Revenue Bond Index. It's kind of a basket of bonds from around the country. It kind of gives you a general idea of where market rates are going. It's published as a single rate. It was declined from a 5.07 the week of the board meeting, which was March 19th, when the board took action to approve the COPs, to 5.01% leading into the week of pricing. As of 4/16, that was a Thursday before we priced the bonds, and declined to a 4.97 during the week of pricing. So there was about a 10 basis point improvement in general market conditions from the time of the board meeting until the time of the sale, which was on the 22nd of April. One of the things in the municipal bond market that's an extreme indicator of supply and demand. It's a supply and demand market. There's no online system that tells you where a particular bond should price. It's all based upon sort of inflows and outflows, demand and supply of bonds. So the mutual fund complex had an outflow, meaning that all the mutual funds, and these would be like Franklin, Denham, all those big funds that buy municipal bonds for their portfolios. Municipal bond money moved out of the mutual fund complex heading into the week of the pricing. So it was showing a little bit of weakness. The California calendar for the week that we priced the bonds was 2.47 billion. That's a little bit higher than normal, but it really depends upon state deals that are coming to market or very large issuers that come to market. The morning that we sold the bonds, municipal bonds opened the morning of April 22nd with a mostly steady tone as investors continue to weigh the day-to-day conflicting reports surrounding the war in Iran. Municipal market data, which is a daily AAA scale that's published every morning early and then comes out again around 10 o'clock. It's a natural AAA scale. So every municipal bond in the marketplace is priced off of a spread to this AAA scale. MMD yields were very steady across the curve the morning of pricing, meaning we had a very stable market in that morning, while U.S. Treasury yields increased slightly the morning of the pricing. The pricing wire was sent to the market on April 22nd at 7 a.m., and the order period was open from 7 a.m. to 8:30. Here's a graph of sort of the weekly inflows and outflows in the municipal market. since April of 25. So over the last year, you can see there were periods of time in which there were large inflows, very few weeks where we had some outflows. And actually, after this week, it continued to grow quite large as municipal bond redemptions came in. So that means that a lot of bonds were either refunded and the bonds were paid off, so cash available, or they were redeemed, meaning May, June, July, and August are huge redemption months, and that means there's a lot of cash in the market that needs to go to work. Year over year, investors have added $42 billion into municipal bond mutual funds, so it's a big number. The calendar for the week of April 20th, the week that we priced, these were the California deals that were getting done. You can see that the Southern California Public Power Authority had an $829 million deal. That was an energy-related financing. Most of the other projects that were done during the week were general obligation bonds for primarily school districts. There was a Melrose district for Folsom Communities Facilities District. That was a special tax deal. LA sold a multifamily housing deal. Again, most of these were general obligation bonds or general obligation bond refundings. And then you can see our transaction listed down there, San Lorenzo Valley Water District, $15.9 million. So the way that we do this is there's an online order flow system that the underwriter, when they take an order during the order period, remember I said that the order period was open from 7 to 8:30 in the morning, and they record all the orders in this online order flow system. And the reason that that's important is if you have an oversubscription, meaning you have more orders available for a particular bond than you have bonds available, that will allow you to possibly lower the yield on those particular bonds. So based on our proposed structure, all of the bonds were sold with slight oversubscription in 28, 29, and 30. I'm looking at the subscription column here. There were no orders in 2031 and 32, and again, no orders in 2035. There was 1.76 times oversubscription for 2 million of bonds due in 2041. We had 4 times more orders than we had bonds available in 2046. And we had 3.84 times more orders than we had bonds available in 2049. So, based on the oversubscription, that tells me as the municipal advisor, tells the underwriter that we probably need to make some adjustments for anything that was 3 times oversubscribed or more. The concept being that if you have more orders for a particular bond, and you lower the yield, you can drop out 1 or 2 of those orders and still have the full maturity sold to the marketplace. So in this case, we were a little over 4 times oversubscribed in 2046. So from the initial pricing wire, we were able to lower the yields by 4 basis points. And in 2049, we had 3.8 times orders, so more orders than bonds available. And that allowed us to lower the yield by 3 basis points while maintaining at least one of those orders to complete the sale of the bonds.
So Ken,
Yes.
So I'm curious, does that negotiation of the reduction in basis points, does that happen then after 8:30? Or
Yes, sir. That what happens is the order period is closed. The order flow system shows us the results of all the orders, and I'll show you who ordered what bonds here in just a minute. And then the underwriter will make a proposal to underwrite with specific changes. So this is the specific changes that they requested after the order period was over before we signed the bond purchase agreement. So then we discussed this on a conference call. Jason and Cherie were on that call, and I decided that these adjustments that they made in the scale were appropriate, and then they decided to underwrite. And as you can tell, they did have to underwrite some bonds that were not sold because there were certain maturities that didn't have any orders. Although the bulk of the deal, which was in 41, 46, and 2049, had orders.
so that's how you took care of the other 240,000 that was not subscribed?
Yeah, so what happens is they underwrite that balance, and then they have to sell those bonds. They own them at the point that we lock it in. They own those bonds, and they have to sell them to their investors, but they have to sell them at the prices that are listed. They cannot mark them up. They have to sell them at those levels, and if the market moves away and they own those bonds, they could take a loss on them. But they have to sell them at the listed price. They can't mark them up or mark them down until they sell at least 10% of that maturity. They sold them later that day because they were relatively small amounts.
Yeah.
Any other questions so far? All right, so here's a list of who bought what bonds in each maturity. You can see there's some pretty big names here. We had Wells Fargo, Franklin Templeton, State Street Global Markets, Hightower Advisors, Eaton Vance, Raymond James. So these were, and one thing I want to point out is that we always want to make sure that these are called going away orders, meaning that these are investors that are going to hold the bonds for a long period of time, meaning they're going to go away into their portfolio or into their investors' hands and they're going to hold them. What you don't want to do is you want to avoid what we call flippers, meaning they buy the bonds, they turn around and mark them up and sell them in the secondary market a few days after the sale is over. These are all going away orders that are long-term investors. They're going to hold these bonds. They might trade them and sell them down the road for cash or whatever reason, but these are long-term investors going to hold your bonds. And this is an impressive list of investors and some big names in here.
So Ken, is that a contractual obligation that they agreed to, or is just a handshake that they're not going to flip them?
It's a handshake, and the underwriters all know, and most of us know who are the flippers and who are not because they get that reputation. These are all going away orders.
Okay.
I mean, you think about it. You got Franklin Fund, you got Wells Fargo. These guys are holding it for their accounts, for their big mutual funds. So that's why I felt comfortable that these are all going away orders and not these flippers that I talk about. And we did sell a couple of the bonds to small individual retail investors. About 75,000 of orders came in 28 for retail. So how did we do comparing to, like I said, the municipal bond market, even though the numbers are kind of staggering when you talk about $2.2 billion in California in 1 week and $48 billion of money flowing into the mutual fund complex. The fact is there is no online system. So the way you price bonds is comparing it to other recent deals done in the marketplace. So what we look at is the MMD scale. That's the AAA scale that is posted every morning around 7 o'clock and then finalized every day around 10 o'clock California time. That's a pure AAA scale. And every bond is priced off of that AAA scale. So what you do is you look at other deals that are similar credits or similar ratings done at the same time. So you can see that Lincoln Unified School District sold COPs for about $6 million. It had an A1 underlying rating, so a slightly higher rating than our A rating. It was insured, AA insured. And you can see that the spreads were about 30 basis points over MMD, where we are about 10 basis points over in a comparable period. So we did better than a Lincoln Unified School District COP with a slightly higher rating. City of Barstow sold sales tax revenue COPs the day before, and you can see that their spread to MMD was about 20 basis points, down to 17, back up to 25, and we sold through that. That was an A+ underlying, again, a higher rating than the district's underlying A rating, and it also had insurance. So we did very well against the two comps that were sold during the same week. And that's the nice thing about MMD, because it allows you to compare deals that were sold 2 or 3 weeks ago to the deal that you're selling today, because it's an index and that spread should really not change. Even though real market yields may go up and down, MMD and the spreads, the MMD will go up and down, but the spreads to MMD should remain relatively constant. Indio Public Financing Authority, a month before, sold $33.4 million of utility revenue bonds with an A+ underlying rating. And you can see their spreads range from about 18 to 13 basis points. We were right in line with that, even though we were an A-rated underlying versus A+. And the Windsor Joint Powers Financing Authority sold $36.4 million. Actually, your underwriter sold those bonds back in March. That was an A+ underlying with AA insurance. We didn't do quite as well as they did, but again, they're an A+ credit versus our A. And you can see that they were about 5 basis points through. When we get out to the tail end here, we're pretty much on top of their scale and might have even been slightly through their scale at the long end as far as spreads. So overall, I thought the underwriter did a very good job of pulling in a wide breadth of particular buyers to add to the list of who already owns your bonds. And they did a very good job of pricing up against reasonable comps that are either the same rating or even a slightly higher rating than the district has. So I think you should be very proud of the way this turned out in the marketplace. I also wanted to point out to the board that we had showed the board that our cost of issuance is going to be $205,000, and we stuck to that budget. That did not change. There was a few adjustments. The printing of the official statement came in a little less than I had budgeted, but we did have to pay CSDA because they actually sponsored your transaction through the California Special Districts Association, and we did owe them some fees, but at the end of the day, our cost of issuance budget was right in line with what we had shared with the board.
Ken,
Yes.
Just a quick question. Maybe I'm misremembering it from when you had originally, proposed the fee structure. I was thinking that it was a total number of about 400,000. What am I missing?
You're missing the underwriter's discount. That's a variable. That's based on a percentage of the par amount of bonds sold. So that's an additional. I forget what their underwriter's discount, but I can find that out in just a minute if you're curious. But they did do it at their proposed level. That did not change.
That did not change. Okay.
Did not.
Okay. Thank you.
So again, I kind of wanted to show you the results from the time that we went to the board meeting on March 19th. This was what was in the board packet. We had a true interest cost of 4.66 and an all-in cost, which includes all the costs, of a 4.84%. The morning of the pre-pricing, when the wire went out to the street, we were at an all-in true interest cost of a 4.57. Again, remember, we had some improvement in interest rates between the time of the board meeting and the time we actually went to the market. And with the final adjustments, that 3 basis point adjustment in one maturity and the 4 basis point in the other, our all-in TIC came down to a 4.55%. So we actually improved on the scale slightly from the order wire that went out in the morning.
And just for my reference, Ken, is the all-in true interest cost, is that taking into account both the 205,000 and the underwriter's discount?
That is correct. Yes.
Okay.
That's why it's called the all-in.
All in. Just checking. Thank you.
And that also includes the cost of your insurance, which we purchased an insurance policy for the transaction. So that includes that as well.
Okay.
So I wanted to point out that per the board's direction, after lots of discussion, we agreed that we would do a deal that would mature in 2050, fiscal year 2050, and that we would levelize the debt service structure. The only one I was not able to get completely level was in 2028, and that was consistent throughout. But however, we did get level debt service through 2050, and that's consistent with what the board's direction was from coming out, well, from all the meetings leading up to and through the board meeting. And here's what the debt service schedule looks like through 2050, just on a graphical basis.
All right.
So with that, I'm happy to answer any questions that you guys might have regarding the sale. I know it was a lot of material in a relatively short time, but I did spend quite a bit of time, and I think Jason and Cherie can attest to this, that we did a lot of pre-education before we actually went to got on calls with the underwriters. So I explained this whole concept of the bond buyer index, the MMD, pricing against the comp. So they had some familiarity going into the pricing, because ultimately I can make a recommendation as to whether to give the verbal confirmation to the underwriter, but ultimately it was Jason's decision to lock it in. But at least he had, I think, some understanding, and Jason, you can weigh in here, but I spent quite a bit of time in education trying to make sure he could follow along with what was going on.
He spent probably an hour trying to educate me on all the stuff, but at the end of the day, I think I understood what was going on and thought we made the right call.
Very good. Well, I certainly wanted to thank you, Ken, and your advocacy for the team that you pulled together too, including Oppenheimer and working with Jason and Cherie. I personally am very pleased with the what we have in play, and look forward to now our investing it in the district. Let me turn it over, see if there's any other questions. Lena?
I don't have any questions. I'm really pleased with the presentation though, and it seems like we got a good deal on these bonds. So thank you for that, and thank you for spending the time with Jason. And I probably would need that full hour as well, but I followed. Thank you.
You bet.
All right. Mark?
Good presentation, Ken. For somebody who's a non-financial individual, I could follow what you're, and good news on being able to reduce the overall interest rate for us in the past or in the month between initial presentation to the board and final pricing. So good.
Well, I wish I had that kind of impact on the market, but I think we got a little bit lucky because clearly there was some improvement in the market. I mean, it was day-to-day news with the war in Iran, right? So
Take the luck when we can get it.
He's giving you the credit for the 10 basis point change.
Yeah.
Take it.
absolutely, you bet.
Bob, any thoughts?
You're muted.
Oh,
All right, I think it was well, oh, am I frozen? I might have frozen. Anyway,
No.
I think it was well done, and I think the district should be with this experience looking forward to the next one in, is it 4 years, Bob, or something like that? To keep that graph line in the last slide you had there, Ken, getting up to the levels that it needs to be in order for us to adequately fund our infrastructure improvements.
Thank you, and I understand.
thank you, Bob. Brian?
Thanks very much. I appreciate the presentation. It was clear. I don't have any questions, and congratulations all around. And thanks very much to you, Ken, and your team. Really appreciate it.
Well, thank you all. I appreciate it.
Let's see if there's anybody online with a hand up. Any questions, comments?
No.
No? Okay. All right. Well, if there's no further.
Oh,
Gage, what is that?
Okay.
Not related to this presentation. I just wanted to take a brief minute and clarify your report out from closed session. Did I hear Director Foltz report a vote on the compensation? Just to clarify, your consideration during closed session should have resulted in a recommendation, and then you have the agenda item for the final vote.
yes,
Okay.
that was what we were trying to clarify with you at the
Okay.
beginning.
Right. And Director Foltz wanted to make sure that it was understood that the one no vote was his.
Okay, but it was a vote on the recommendation. Right,
Yeah.
just recommendation, not the final vote. Okay. Just wanted to clarify that. I did want to flag one other issue. You have the final vote set on the agenda for today, but today's meeting is a special meeting, and executive compensation is required to be presented at a regular meeting. Board compensation and executives, which includes the general manager.
Okay.
I thought you clarified that with Gabe.
I thought so, but okay. Apparently a misunderstanding. Okay, Gage, appreciate you clarifying that again.
Right. I apologize. I don't recall a question about the regular versus special vote. I do recall a question about the closed session versus open session.
Okay. All right. Well, very, very good. So, okay. All right. Any other thoughts on Ken's presentation? Ken, thank you very much. Appreciate all the effort.
Everyone have a great evening. Thank you so much.
And thank you.
Okay. All right. Okay. So I guess what that says is that I have to poll. I don't know if it's too late. I have to poll the new business 11A, General Manager Contract Review, from this special sessions agenda.
Correct.
So we
Yes.
will do that. Good thing you're patient, Jason. Okay. So now we move on to unfinished business with system consolidation policy.
Yeah, thank you, President Russ. So this policy establishes a consistent, transparent framework for evaluating requests from outside water systems to consolidate into the district. Whether those requests are agency, private, or state mandated, protects existing ratepayers by requiring that consolidations be technically feasible, financially neutral, or beneficial, and fully compliant with state law, and evaluating costs are all borne by the requesting entity. The administration committee reviewed this policy on June 15th and recommended it for adoption, or recommended it to the board for adoption without the current section 10. It was then presented to the full board on July 2nd with a revised section 10. The board provided feedback and directed staff to return with revisions. The revisions before you tonight has added language stating that the district cannot approve a consolidation that results in a current ratepayer subsidy. It has hyperlinks to all the code citations throughout, so directors and the public can easily reference the underlying statute. It also has a revised infrastructure standard section to reference the district's general engineering standards rather than specific numeric thresholds, and added a detailed appendix outlining legal, operational, and financial information the district will require from a requesting entity. And with that, I'll take any questions.
Thank you, Jason. Brian, would you like to start with any questions?
I reviewed the document and prior drafts. From my perspective, this does a good job of laying out clearly to all involved that our water district is willing to contemplate mergers and assuming the water systems near us, our neighbors, without any subsidy from our ratepayers. I think it does a good job of spelling that out and puts the state on notice that we would expect the lack of subsidy to apply in kind of state sought consolidations, these state driven processes. I think it's a good policy and I'm comfortable with proceeding on it. You asked me if I had questions. I don't have questions. Thank you.
Thank you, Brian. Bob. You're muted, Bob.
To keep the background noise to a minimum here.
There we go.
I appreciate the updates because it did address a number of the hot button concerns that I have about this. I will say I just so wish we'd had this kind of policy in place for the last two major mergers we did. I think it would have resulted in a lot fewer, a lot less emotional drama and hurt feelings that came out of that. So that's really the objective I want to get to. When you set what the rules are going to be, everybody can kind of go into them with a clear conscience and clear direction. Having said that, I did want to suggest a couple of changes, minor changes. Under 7.1 infrastructure compatibility, I would like to suggest that we insert the words then current in front in between districts average. Excuse me. The then current districts average, insert it between the and districts. And the reason for that is over time, our infrastructure will improve. And so, the further down the road we get, the better our infrastructure is going to be. And I don't want there to be any confusion about what the metric is. And of course, that will require district staff to maintain the inventory up to current levels.
Okay. Thank you. Any other suggestions?
On the I'm not exactly sure how to do this, but the Lompico experience kind of gets me thinking about what happens when there is a consolidation that takes place and there's an agreement between both sides. Is there a sense that those promises, which typically will be assessment district on one side and improvements in the district or improvements in the consolidated group on the other, that those promises are actually going to be contractually made and kept. Because in the case of Lompico, we did not do that.
I don't think it can be addressed in the policy. I think that's more in the like construction agreement or something down the road.
Would
But
that be in
is the
final?
is the intent in the policy that this would be a bi-directional contract that ultimately we would enter into?
Isn't that what a final consolidation agreement is? Is it's a binding contract on both parties, outlining both the obligations for each party?
Okay.
So,
That's my expectation. Yeah.
yeah,
Okay.
We signed, they
Because
signed.
because we had something like that with Lompico, and the district never fulfilled our end of the bargain.
Okay, that's not
Well,
what
That was then. Hopefully it's different now.
yeah.
we're talking
Okay.
about policy.
I appreciate the point, Bob, but I guess if you don't mind, can we maybe just focus on
Yeah.
any changes to this consolidation policy as
Well,
proposed?
that's what I was going to say. If it's clear that the intent of the policy is that it is a bi-directional contract, then I think we're okay. But let me, and I hear background noise in there. If there is a point of order that needs to be made or something like that, please make it so that everybody can hear it and that it's not a whisper campaign there.
Yeah, there's nothing going on.
Yeah, there's no noise on our side here in the conference room, Bob.
Okay. Well, I thought I heard some background conversation going on.
No,
Just to make sure that I understand this on the state stock consolidations. So it says in here that the state can force a consolidation without our agreement. What is meant by that?
The state can mandate a consolidation between a failing district and a neighboring district that can take on that failing agency. Now, in the statute, the state has to fund that consolidation, but let me put the guardrail on that one and say that it's also written in the statute that the state gets to determine exactly what level they're going to bring that other failing agency up to the consolidation.
Okay, so they could, in fact, not bring it up to our fleet average and say, hey, you got to take it on, which then would mean that our current ratepayer community would be subsidizing that district.
Either that, or you're then forced to do an assessment district.
Assessment district.
Yeah.
Okay. Is there any standards that the state uses for what they would consider minimally qualifying for that, or is it really totally up to them to determine that at their discretion?
It is based on the current code. I mean, it's supposed to be 8-inch main lines, storage capacity for correct fire flow. All of those things are supposed to be what they're brought up to.
Okay. Okay. Well, that's okay. That's good. Okay, let's see. And then under the LOI, I wasn't clear what this meant. The district may decline to proceed or withdraw from discussions at any point following an LOI if the terms of consolidation are not in the best interest of the district and existing ratepayers. But that could be overwritten by the state forcing the consolidation, correct? So there's sort of two ways this can come out. One is we could withdraw if the state funding isn't there, or two, the state could say, hey, you're going to do it anyway. We're providing funding, but only to a minimum level.
Yes.
Okay. All right. Well, that's clear. Could we insert the word binding in section 11 under consolidation agreement? Could we insert the word binding between final and agreement?
Sure.
Okay. All right. I think that's all the ones I had. Really appreciate. Sorry. Sorry. Was there a question?
No,
No, sorry. I just want to say I appreciate the updates, Jason, and look forward to perhaps using this in the future, near future.
thank you.
Okay, thank you, Bob. Mark.
Yes, the comment that I have is on the infrastructure compatibility, which Bob was also addressing earlier. The statement must meet district standards for whatever infrastructure they're bringing to us. I looked at the district standards, and by and large, those are here's how new systems should be constructed, whether it's pipe, whether it's fire hydrants, anything else out there. I expect most of these smaller entities that would be attempting to consult, they don't have they don't have records, they don't know. Yeah. So I don't know what value the other entity might get from district standards, but I still think it's appropriate to reference them. What I do like here is the then current district's average system infrastructure for pipe capacity, operating pressure, storage capacity, fire flow. Do we have that now? Or is that
those numbers?
Well, no, not here.
No, yes, we have that data.
Okay, so we have that data as a point of reference on a sort of on a.
And Gary and I were talking about this earlier, but to that point, I mean, maybe I was thinking about it and designing some sort of matrix of overall district health, and adding all those components in, because having a good pipeline is no good if you have bad storage and all this. So what does the overall health look like? And then that way we could compare apples to apples. Like how old is your pipe? Besides just how big is it?
Yeah. So that you're comparing something from an entity that's attempting to be consolidated into us versus what we have now as far as a system average on those.
Correct.
I like that, but I don't think that needs to be here. I think that's
it's an internal evaluation metric.
Internal evaluation or longer term goal to try to get to that point. But I think that metric, if that does get developed, is useful for discussion here at the board, at committees, or at a general public level also. So good. Okay. That's the only comment I have on this. I like the structure, and yeah.
Thank you.
Right. Good. Oh, and I will mention it here. If we do finalize this, I recommend that this gets sent to River Grove Mutual Water Association.
I'll send it over.
So that they're aware of, hey, this is recent. Here's what's been developed, so that they can then share that with whatever engineering consulting firm that they're working with, and eventually with the state also. Okay.
Thank you, Mark.
Sure.
All right. Lena, please.
Yeah, I think the edits all look really nice, and I'm really happy with this. I do kind of share that concern with the whole meeting our district standards, because I think I like the discussion that you guys just had to resolve that. So yeah, thank you for all the work on this.
Okay. All right. I would just like to add that I'm actually really impressed with this policy. I think it really sets a good template for people to look at, and I guess the admin committee and the previous work that was done, good job. And Jason, I also really like this idea of a healthometer or whatever, healthometer for the district as being, some kind of a weighted decision matrix of just different metrics that we have: pipes, age, storage, capacities, all that kind of stuff. And as kind of an interesting way of looking at how are we doing as a district. And obviously that number should improve as we then complete the CIP project, right? And get those done. And Now we just upgraded a whole section of the infrastructure. So if there's no other director comments, anybody in the public?
Nobody online.
Okay. So
I'll move to adopt the water system consolidation policy as presented at the July 21st.
Do you want the amendment?
and with the amendments, the friendly
Yes,
friendly amendments?
yeah, with the amendments that have been recommended.
Right. 2 amendments to then current in 7.1,
Right.
right? And the binding in the final. Okay,
Section.
Second,
did you second it?
yes.
Okay. Leah, please.
President Russ,
Yes.
Vice President Lane,
Yes.
Director Lardier,
Yes.
Director Smalley,
Yes.
and Director Polks.
Yes.
Thank you. Motion has passed.
Fantastic. All right.
Not to interrupt the flow of the meeting, but I just need to share that I'm going to have to leave a little bit before 7:30, and I just wanted to make clear of that in case this next item goes through that time. Thank you.
Thank you, Brian. Okay, let's move on to item 10B, our favorite discussion, Highland Tank.
Thank you, President Rutz and directors of the board for considering the contract amendment number 1 for Mercedes Miller Engineering, construction support of the district's Highland Tank project. Staff is recommending that the board approves contract amendment 1, which will allow the engineer of record to provide construction phase services for our Highland Tank project. The agenda packet includes the initial construction support contract with Mercedes Miller Engineering. On page 55 of the packet includes a detailed breakdown of the engineering fee estimate provided by Mercedes Miller Engineering in October of 2025. 7 tasks are listed with estimated hours for 9 personnel hourly rates. We've included a letter from Mercedes Miller Engineering, which includes their explanation of the additional services provided that has utilized all the available funds and the remaining tasks that we need to complete, and the engineering fee estimate for those additional tasks. I would highlight that the original engineering fee estimate only included 21 hours for responding to RFIs. We've had 29 RFIs to date, and we've been invoiced for over 40 hours to respond to those RFIs. The original estimate had a total of 43 hours for submittals, and to date, we have been invoiced for over 70 hours for review of the submittals. We've had 56 submittals to date. Mercedes Miller Engineering provided an initial letter on June 10th, alerting the district that they were going to need additional funds to finish the project. That letter was revised, from the July 2nd meeting. The initial ask was for just over $19,000. Now the ask is for $16,000. I've asked Rodney, and Rodney has joined the meeting in case there's any questions directly for Mercedes Miller Engineering, or if you have any questions for staff, we'd love to answer your questions.
All right. Thank you very much, Garrett. Maybe just to kick it off, I think the big issues that you heard the director's voice over the last few times we've been is one is, what are the lessons learned? How can we manage this going forward so that there isn't a surprise, right? And whether that be, hey, when we're at 75% of a contract, do you get a notice, something like that? The other thing that, and maybe Rodney can answer this, or maybe I just misunderstood it, is I noticed in the accounts payable, it seemed like we suddenly got $19,000 in MME invoices all on June 12th. And so did we not get them every month, or, and so you were surprised? I mean, I just, the work that you've outlined and the explanation, we greatly appreciate that, Rodney. Thank you. that helps us understand the process, but we're also just trying to understand, you know, it certainly seemed to have spent a little bit faster than we had thought. And so how can we maybe take a better corrective action in the future, be a little bit more proactive in managing? So maybe those are just a couple quick questions. And maybe Sherry, you can tell me if those, I just noticed that this morning. And it struck me because I know this was our topic coming up, was there was over 19,000 all payable June 12th, I believe. And so if you got the notice that they're going to be over, June 9th or something like that, well, you know,
So my recollection is
Yeah.
that we discussed, I believe, was it in May, Rodney, that we were going to need additional budget to finish the construction phase support, and that Kennedy provided a letter on June 10th.
I think that's right. Often what happens is we add up our time on a project and we'll compare that to the budget, and then if I see that we're going
and were we, Rodney, getting monthly invoices, or was there a break in getting invoices from you for this particular project?
it's typically monthly, and the effort does vary from month to month. It's not always the same. Generally, the beginning is intense, and then it smooths it out, and then the ending is a little intense. But the particular part of work we were doing on this project was submittal review and RFIs, and we didn't put an exact number of RFIs and submittals that we would expect. It's not something we've done before, but it does make me think that might be a good thing to do in the future. But we have received about 2 times the amount of normal RFIs and submittals. And, another metric that might be helpful for the board to understand is oftentimes you'll see construction administration services, approximately 10% of the construction cost, perhaps 8%, this type of range. And with $1 million construction, it makes it pretty easy to do the math on this one. Now, that number includes all aspects of construction administration. And in this particular project, although we've done all aspects on previous projects, on this particular project, Garrett has a team of inspectors that is going out on a day-to-day basis. And so we talked in the beginning, to Garrett, how do you want to do this? He's like, yeah, we want to do the daily inspections. We'll run the weekly meetings. We're going to do those in-house, but we would like you to do the submittals and RFIs and attend the weekly meetings. So we were able to reduce our fee. We kind of had to estimate what it would be. But we came up with an estimate of like 2.5%. And then as we've gone through, we have received more RFIs than we expected. So we're going to be up closer to maybe 4%, I think. And so, at the end of the day, I think it's a combination of things that lead to an increased amount of RFIs and submittals. In some ways, it's not directly in our control. In some ways, it's related to the way that the contractor goes about his submittal preparation, and then the number of questions he may have. So, in this case, there was quite a few. We were out there today, and we're helping with, pointing out things that we would like him to be improved, and sort of working in a collaborative manner. We, for example, and they submitted a couple of alternative concrete mixes. So each time we'll go through and check the concrete mixes and make sure they're the quality we need. But they'll do that a few times because they'll maybe want to change suppliers and have flexibility on the day of the pour to change. So I think when we help the schedule of the project when we continue to sort of respond to these types of things.
Thank you, Rodney. And want you to understand that we absolutely appreciate you and your firm's assistance. Very important
Thank
for
you.
us. Yeah, you're being the engineer of record and having all of that solid is very important to us. So Sherry, we don't know if those invoices were you able to find them or?
Yeah, I mean, we get it looks like we get invoices monthly.
Okay. And the 19,000 that showed up on 6/12, that's just one invoice?
But
And
I think wasn't that for 3 invoices? And it was for 2 separate projects, I think.
okay, yeah,
Yeah.
see that,
One's
okay,
for
that,
Island, one's for Redwood Park Echo, and one's for the booster, the spring
oh,
booster.
okay, so they're really separate pieces. It's not,
We try and
Yeah.
each piece of infrastructure, we have an individual work order. So if I'm working on Redwood Tank, even though it's one construction contract, I charge it to that work order. If I'm working on Echo Tank, I charge it to that one. If it's related to the booster station, we have a
Gotcha.
third work order. So we
okay,
can try and assess how much effort to put into each piece of infrastructure.
okay, thank you.
Yeah.
All right, let me turn it over to some other directors' questions. Mark, please.
Sure. The July 17th, 2026 letter from MME outlines the reasons why they are asking for the additional contract amendment. This is the question that I heard I was asking, and I think the rest of the board was asking at the last meeting. That recent letter is exactly what I, as a board member, want to see when these additional requests come through. Reading through that, I can easily see why MME has needed to work additional hours. I went back and I looked at, well, who is our general contractor? It's Corcus Construction. For the rest of the board, Corcus is a company that is relatively new to the general contracting game. I looked at their bid and the next lowest bid. The next lowest bid is from Anderson Pacific on this job. Anderson Pacific's bid was $423,000 more than Corcus. So I fully recognize that a more inexperienced general contractor is going to be less certain about a number of things on the bid package. They're going to be submitting more questions. They're going to have more questions. And the alternates that they're seeking to do with, we have an alternate concrete supplier that we can use now. We need you to review a second submittal for concrete or a third submittal for concrete so that we can maintain schedule. Okay, that takes more time for our engineer. Fine. If we're able to do this kind of work with a contractor like Corcus then and have it better supported with a quality engineering firm like MME, yes, because we come out money ahead in the end with this by paying a little bit more here, but having a significantly lower priced GC. So kudos to that for being able to deliver this, Rodney, and with the language that you put in that for me makes it clear. Here's why you need this. Okay, I can agree with that. Bob, to some of your questions on the invoicing and the rest of that, and when those come in. As a construction manager for clients, I always tasked my engineering firms and others like that are providing this consultant support. You track your own budgets. When you get to an 85 or a 90% point, I expect you to be putting up a flag to me so that I don't have to be doing that. Don't put that burden on my back. It's on your back to say, and they did that back in May, but having this level of documentation then that we see now in this packet, that July 17th letter, clearly spells out the why of it. So fully support that. Hope that with this level of service that I'm seeing, that I'd like to see us working together with MME if the opportunity presents itself. So in the future. Thanks.
Thank you, Mark. Alina.
Yeah, the one thing I saw in there is maybe I'm remembering incorrectly, is that you said that we cut the meeting times down to 30 minutes, I thought, and they were listed as an hour. That's the only thing that jumped out to me, and I didn't know if we're getting billed for that full time.
We're not. So in the initial estimate for the meetings, it was 6 months at 4 weeks times 1 hour for a total of 24 hours. To date, we've only been invoiced for 1.6 hours.
Oh, okay.
So they just bill based on the actual time spent.
Okay.
Yeah.
Yeah. All right. That's all I had. Thank you for work on this.
Okay. Thank you, Alina. Brian, please. Any
Brian
thoughts?
left.
Oh, Brian's gone. He's left. Okay. Bob, any thoughts?
Yeah, excuse me. Yeah, it did seem like once Garrett was going through some of the reasons for the change order in terms of number of RFIs and submittals, it did seem like a large number. But I'm glad you explained it. I will say in the concrete part, though, since I live across the street from the construction, I was really surprised to see Watsonville concrete supplier coming up to Boulder Creek. I mean, that's one end of the county to the other. I'm assuming they had better product or lower prices, but it was interesting, I should say that. And if that's driving some of the RFIs, concrete, of course, being a big part of it, maybe in the future, there's some things we can learn about how to provide some level of concrete specifications that won't require a lot of RFIs or other submittals. I'm not sure if that's possible. My brother's in concrete. He would know it all, but that just seemed like a really odd thing. So I don't have any other questions on that. I think you covered it well. On the budget, though, Gary, you said this is coming out of the $1.5 million budget, which is great. I went and looked at the report through May, though we're only showing about $277,000 of expenses on this tank. The tank's constructed, and I think if it isn't being filled, it will be soon. Really? Only 277,000? That seems really low.
Well, as far as the construction invoices, they'll invoice us at the end of the month for the work performed the previous month. And so I expect the next invoice to have a heavy amount for the tank erection.
Okay. Do we have any sense on what that might be?
I believe the last time I checked, there was about 500,000 left in the PO. But I haven't received the bill yet.
Okay. So the reason I was asking is I want to make sure that we're still under budget. I mean, it's one thing to say it'll come out of the 1.5 million, but I want to make sure we're still under the 1.5 million on this. And I couldn't really tell to a reasonable degree based on the finance report that we have in the packet.
I mean, I would expect the entire $1 million contract to be paid to Corcus.
Okay.
Yeah.
And so with that $1 million, we add that to the 277 plus MME, and that would be the total amount. So we're still under 1.5 million.
My understanding is we're still under the 1.5 million.
Okay. I hope so. It'll be interesting to see when we get the final numbers, but the tracking on this seems to be off relative to what I can see when these kinds of things come in front of us. Okay, that's all I have. Thank you.
Thank you, Bob. Let's see. There any other comments? Any hands up, Scott?
No hands up.
No hands up. Okay. Rodney, I just wanted to make a final comment that I don't expect that you're going to have to for 16,000 have to go to this level of justification. And we really appreciate your showing your face and talking about the process. We appreciate that greatly. But you obviously can hear from the board that we just want to be able to manage this in a way that there's no surprises and that we know, that we're on track to keep on budget. So thank you very much for the extra effort.
Thank you for the good feedback, and I'll pass it on to Dave and Jacob, who are doing a great job out there. We really appreciate working with you guys.
All right, keep up the good work. Thank you. If there's no further discussion at the board, yes, I would.
I'll make a motion.
Yeah.
The board directs the general manager to execute contract amendment 1 with Mesiti Miller Engineering Incorporated for construction support of the Highland tank in an amount of $16,000, increasing the not to exceed contract from $25,570 to $41,570.
President
I'll second.
Russ?
Point of order, it might be pro forma at this point, but did we ask for public comment? I missed that.
Yes, we did.
We did.
Right, thank you.
I actually remember.
President Russ?
Yes.
Vice President Lane?
Yes.
Director Smalley?
Yes.
And Director Polks?
Yes.
Thank you. Motion has passed.
All right. Thank you. All right. We move on to unfinished business 10C, board policy manual.
Thank you, President.
All right, Jason.
Yeah, here we go. This current manual originated as a draft back in 2024. Staff then presented a revised version to the board on September 4th, 2025, which the board gave further edits. It came back to the board again on February 19th of this year, and given the concerns raised by Director Poltz, it was tabled and assigned to an ad hoc committee comprised of President Russ and Director Poltz for further review. The ad hoc committee's revision came back to the board on May 7th. At that meeting, the board directed that much of the language be brought back to closer to the version that was presented in February, and that the manual undergo legal review. Both of those directions have been completed. This manual now closely mirrors the February language, with one key revision: a supermajority vote requirement to formally censure a director. This important safeguard is to ensure censure is not used as a routine political tool by a simple majority, and reserves it for a situation where there's a broad, well-substantiated agreement across the board that a director's conduct warrants formal action. The full manual before you tonight has also been reviewed by legal counsel, and staff recommends the board review these final revisions and consider adoption as a district's governing document. And with that, I'll turn it back over to the board.
Thank you, Jason. I just want to start by saying I'm very appreciative of all the time that has been spent on this by the admin committee, by Director Foltz and Jason independently, and all the input that we've gotten from folks. Personally, I feel like this has come a long way, and I think it reflects a lot of compromises and hopefully captures the spirit of what we're trying to put into a board policy manual. And with that, I'd like to ask Mark for any further comments or suggestions.
Sure. I do agree that this, by and large, tracks the February 19th, 2026 version that we saw then and that we're seeing now. I did have a question on the significant change that you're mentioning, Jason, on the supermajority. Because when I see that, okay, well, what does that mean? So I looked it up. Supermajority can mean 60%, 66 and 2/3, 66.7, or 75. So 60% is 3 out of 5. 75 is obviously 4 out of 5 of the group. So to me, leaving that the way it is in there is then still open to debate at some future point. I'm happy with majority rather than supermajority, reverting back to the way it was in February.
If it stated 4 out of 5 as the definition of a supermajority, would that mean
If
You have to have a full, everyone here.
that's right?
Yep.
I think that is the idea, is that it has to be everybody except for the director who is potentially being censored.
Right.
Everyone has to say, yes, this is significant enough
Mhm.
that we are all voting for censure, not just a simple majority. And that is certainly the idea of a supermajority.
Of all but the individual being censured.
So we could certainly
Okay.
define it that way, so it's very clear.
If the rest of the board thinks that supermajority is appropriate here, then yes, we have to define it. Because I don't want to debate that a year from now or 2 years from now if this comes up again. Yeah.
Yeah.
Well, what does that mean?
What is it?
Well, I think it means one thing. You think it means something else. Oh, no, here's clearly what they were intending. Nope, define it.
All right. And otherwise, the rest of the document is agreeable?
Otherwise, I did have a question, and I don't know that it needs to be included. Also on that page, further above, the president, in consultation with the general manager and district council, will determine whether to place the censure request on a future agenda. So this is in response to a censure request being submitted by an individual board member for the president and the GM to consider. Question that it leaves me with is, well, what if they don't think it's valid or appropriate?
Well, one of the clauses in here somewhere, it does state that any director within 3 regularly scheduled meetings has the right to have an item put on the agenda.
Right.
So,
but at this point, this is still confidential. So it's not going to be on the agenda because it's confidential. So is it appropriate to say, as a parenthetical to this, and if the president, GM, find that the request is not valid or something like that, that they'll notify the board member who sought to initiate the censure proceeding.
and
Something like that, just to
close the loop.
to close that loop.
Okay,
Yes.
that's your point.
Yeah.
Okay.
I think fairly simple language. I don't
Yeah.
want to see this come back again. I want to see this done tonight.
All right. Maybe Jason can come up with, he's a good wordsmith. Maybe he can come up with a phrase there to just close the loop.
Yeah, close the loop on that. Yeah, it's simple enough, I think, to close that part of it. Yeah. Okay, those are the only 2 comments that I have on this.
Okay.
Yeah.
And Gage, we see you've got your hand raised, please.
Did I hear correctly that the version proposed tonight calls for a supermajority vote excluding the individual censured?
It does
Or
not say
to be
that.
censured?
No,
Because
they're saying that the supermajority, because more than likely, what they're saying is that the person who's going to be censured more than likely will not vote to be censured. So they're saying that that person, excluding that person's vote, everybody else would have to be unanimous.
Okay, sorry, I definitely misunderstood. I was going to say that is not the version that we reviewed. Okay, thank you for the clarification.
All right. Thanks, Gage. All right. Mark, you're
I'm done.
Okay.
Yeah.
Lena, thoughts, please.
Oh, yeah. So page 76, I brought this up again when it talks about political funds or contributions at district facilities or district sponsored functions, either wholly or partially. That partially, what does that mean? Because we're at the farmers market now putting water out there. And that was a big thing when I campaigned, was going to the farmers market. And so now am I not allowed to do that if I run for re-election? I don't really like that language.
I'm sorry, where is this?
Page 76.
Is it under D? The D part?
The district will not solicit fund. I guess I can bring it.
Oh.
I just wrote.
Because I'm looking at page 76 of the board package that was
Yeah.
sent out,
Yes.
and it's
I wrote
it's
down
highlighted in
seven.
purple.
Looks like C is the one.
Oh,
Which-
yeah.
Oh, C?
C, sorry.
Ah, okay, not D. Okay.
Will not solicit political funds or contributions in wholly or partially. What is
It's partially.
that may be held at other facilities? So if, say in the farmer's market,
Is
and we have a
district.
water station there, is someone who is
If-
running not allowed to also be there with a booth?
No,
Wouldn't that be separate?
No.
They would, I mean, a person could have their own booth, but it wouldn't be part of our booth.
no.
Yeah.
I would say no.
We put it
You're
be-
not behind the booth and soliciting for campaigns at the
Okay.
same time.
Yeah.
No,
I agree.
Okay,
agree.
I just
Yeah.
I just want to
Right, It
make,
should be independent.
I think that that's a conflict of interest right there.
well, but you can both be at the farmer's market.
Oh, yeah.
But
you would have
I
your
can
own,
have a booth and the water district can have a booth.
Right.
Oh, yeah.
but you
Okay.
can't be in the water district's booth and then be raising funds.
That's fine.
Yes,
Okay.
yes.
I guess I should have, and then on page 78, I guess I should have figured out where I didn't write the thing. So the presentation of the opinions of the directors.
What paragraph? Are we
Goodness,
at?
I didn't write down.
Oh, there it is. That's J1 last sentence.
Oh, J1. Okay. Yeah, I think everything after the comma should be struck.
Okay. I would go along with that. That's people have the right to express their opinions, period.
Yeah,
That's
I just
the
don't
bottom
think,
line.
yeah.
Yeah.
I just don't
Okay,
think
I
it's necessary
think that's-
after that.
Maybe take a note of that and we can amend it appropriately when we gather everyone's comments.
And then page 79, number 3, I wrote number 3 on there. I guess I'm just kind of confused why it says in a future meeting. Like, why do we have to have that? Can that be deleted? It says director shall refrain from restating arguments already made or reopening issues on matters that the board has formally concluded to accept as permitted under applicable parliamentary procedure. In a future meeting, or like why, or I don't understand why we need to put that language in there. So we can keep, something we've decided, and concluded. Why do we have the language that we want to keep bringing this up in future meetings?
Isn't that stating that we've already decided, so we don't want it to come up in a future meeting? Or am I misreading it now? And Jason, if
says
you have any thoughts on
accept.
this, help.
It's saying that we can bring it back up. You're not going to bring it back up, except, and then it says this, or in a future meeting, so you can bring it up again.
Is permitted.
It's really, this is a document that's designed to govern how the board runs its meetings and the policies of governing you guys. So, I mean, if it's the will of the board that once it's decided it's done, then that's up to you. But I think it's put in there to make sure that people have the right to voice an opinion and not say that once something's decided, we're never ever talking about it again. You got to have some leeway on that. So
Okay.
If it's in its,
Bob,
Go ahead,
if I
Bob.
may,
Go ahead, Bob.
I would be very careful about restricting people in that way. A previous board decided a long time ago that glyphosate would no longer be used. I know there are people on the board that wish to use it in limited circumstances. You really want to go down a path where something's been decided never gets talked about again. Same thing on finances. It took many, many years to get a financial model in place that was reasonable. You do not want to restrict people in any way, shape, or form, though I understand that there is a political reason for doing so about uncomfortable topics, but you just don't want to do that.
Okay. All right. Thank you, Bob. Let me finish
Okay.
up with Alina, make sure
Did you
to
have
cover
something,
any other suggestions.
Mark was about to say.
Did you have
something.
something
Okay.
on the
Oh,
in the future meeting?
okay.
in a future meeting, because I think that's the 4 words that you're hung up on, right?
Yeah, I
In
don't.
a future meeting, and it looks like those have been recently added.
And reviewed by legal.
So I'm also looking at that statement those 4 words, in a future meeting, and scratching my head, similar to Alina. And you don't have hair to scratch, Jason, but it appears as though you're doing the same thing. Well, I don't know if it's causing folks to say, well, what does that mean? Does it mean this or that? Just take off those 4 words.
Let me ask Gage if Gage, you have an opinion about having in a future meeting phrase or not. Do you see any pros or cons to its inclusion?
So as I read it, how it's drafted, the in a future meeting inclusion is one of 3 identified circumstances where a board or where directors would not be asked to refrain from restating arguments on concluded items. So my understanding of why that's in there is to clarify that when we have this policy that says once we've concluded an item, directors should refrain from rehashing those arguments in that same meeting. That doesn't preclude you necessarily from repeating those arguments in future meetings if that item comes up for whatever reason. That's how I see it. Ultimately, there's not a legal reason one way or the other, and it's a policy decision for the board, but that's how I read the sentence there.
Okay, thank you,
Okay.
Gage. That's for me, that's helpful.
Okay.
Alina?
I'm fine to move past.
Okay.
And then my last one is I will not agree to the super majority. It needs to be changed back to majority.
Okay.
That's all.
Okay. Bob, your comments, please.
So I have a statement that I like to read relative to the issue around consensus and the reasoning for why I believe the censure section is really bad. And there are some concepts and language from a free speech website that I think apply to our discussion about the past moves to punish me for speech and how the censure section makes things worse. Santa Cruz County and the SLVWD community is a liberal area, and much of its political calm comes from a degree of ideological agreement, i.e. consensus, on a wide range of issues. I share in that consensus on many topics. Consensus sounds healthy, and sometimes it is. A society that broadly agrees on basic rules can be stable, cooperative, and pleasant to live in. But genuine consensus has to survive disagreement. Once institutions, boards of government agencies, government officials, and political machines preserve agreement by punishing dissenters in any fashion, including censure or kicking members off committees, the word becomes a flattering label for conformity. Social psychologists distinguish between loose cultures, which tolerate dissents from norms, and tight cultures, which enforce norms strongly. Tight cultures often function smoothly. They're also prone to treating unwelcome ideas antisocial, discriminatory, disloyal, or professionally disqualifying. The dissenter is no longer someone who may be wrong, but a problem the institution must manage. That is the danger of a narrow Overton window. The people inside it may experience broad agreement and social peace. The people outside it experience false and libelous allegations, possible censure, investigations, compelled coaching, canceled talks, and policies written broadly enough to make them guess as to what they may safely say and how they may safely say it. as we have today, as if giving up your agency to the mob is going to be safe. Because no matter what you say or how you may say it, someone will take offense. Or as a Hong Kong security official explained recently, if you tell people exactly what they can't say, that will just let the criminals off the hook. Our community's consensus remains calm in part because of the cost of disturbing it keeps rising, particularly in the area of our prudent and stable finances and infrastructure over the long haul. At the height of McCarthyism, Edward Murrow warned, "We must not confuse dissent with disloyalty." Unfortunately, the powerful in our community increasingly confuse dissent with harm. In my case, my so-called crimes against our former district manager, Rick Rogers, were punished in secret, a veritable star chamber, with the explicit connivance of our then general counsel, who schemed to find a loophole to keep the laughable charges from being exposed to the public. And then as a bonus, Mr. Rogers was able to weaponize these so-called crimes in a public meeting, but since all chicanery took place during closed session, I was constrained in my ability to respond, even as the board contemplated censure at that time based on pure slander. Further, our former finance manager, Kendra Reed, used one, and I emphasize one, meeting, which I had with her and Rick Rogers, and my comments during board meetings, all of which are available on video, to falsely slander me as somehow creating a hostile work environment when all I was doing was
point of order.
advocating for sane and sound fiscal management
Bob,
in the
I'm
face of
sorry.
the staff to do otherwise. Prudent fiscal management is something this district hasn't done for decades.
Bob, can you hold on a second? I have to address a point of order.
Oh,
I'm
sorry,
not-
I didn't hear that.
I'm not understanding what this has to do with the edits.
I'm talking specifically about the censure here.
I concur with Alina.
I'm
looking for
talking
comments
about the
on
censure
edit.
here. And if you'll give me about another 2 minutes, I'll finish up my statement. I deserve that at the very least for the way I've been treated.
Yes. Please go ahead.
Your call.
And then that set of standards and lies were used as a predicate to kick me off committees once a current staff member realized they could weaponize my comments, something that should concern all board members. Were they thinking about the unintended consequences of encouraging that behavior? It is this underhanded conduct on the part of the board which taints any kind of censure resolution offered in the future to anyone else who dares dissent from the prevailing narrative about any serious policy question like finances. The fact that any nonpartisan investigation into a censure charge is now excluded from the policy makes clear that the warning of Mr. Murrow is still in full force and effect. Only it is now the liberals, the ones who fought for free speech and dissent in the 60s and 70s, who have now come to power, who now apply the same tactics against anyone who dares to challenge them. In their minds, you're either 100% on their side or you're the enemy. No disagreement is allowed. It is a sad state of affairs. I hope our future generations will correct. But in the meantime, free speech and dissent is likely to be punished even more severely, and I see it coming. Even worse, the scandalous treatment directed at me was not leveled just at me. It was sending a blunt force message to anyone else in our community who dares to dissent, and that is, shut up or else. Thank you for listening.
Thank you, Bob. I appreciate your sharing your thoughts on the censure issue. Are there, within the document itself, let me ask you how you feel about the supermajority inclusion?
I mean, that's the bare minimum that the board should be doing in order to make this not the star chamber that it's actually going to turn out to be. But I guess at this point, if it's 3-1, I mean, I'm voting against the board policy anyway. So there you go.
Well, it may be more complicated than that, but appreciate that. All right. Any other comments from directors on the discussion we just had? Alina, anything else?
I think that when we're on agenda item, we should be talking about the specific agenda item and not listening to speeches. And
I concur with that.
Okay.
Wow.
And
yes,
I was okay with it, and that's why I allowed it.
Okay.
This has been a long and contentious issue for what, a year and a half. So giving Bob 6 minutes to express himself, I think was okay.
Well,
Yeah, I
it's
really
it's
appreciate
against the
that, Bob.
rules.
Thank you very much.
It's
And for the
it's
rest of
not
you,
on it. It's not an
whatever.
agendized item, so it is a Brown Act violation.
I think it is included within that. But we can
It
get
is not. I addressed the censure specifically in
censure
my
is-
conversation.
Okay.
So
right.
Unless Gage says that he has an issue with this, I'd like to
We
keep
can-
moving.
yeah, we
Okay.
can agree to
Okay.
disagree. Let's move on.
Okay.
Yeah.
So let me just see kind of where we are. I heard from Alina that she's amenable to some of the other things, like in a future meeting, she's okay to let that stand. But you were adamantly against the supermajority clause.
Correct.
Okay.
And then the page 78, I think we agreed on striking everything after the comma.
Yes, and striking everything after that. That's right. Okay. Were any other
No,
suggestions?
that was it.
Those were
We
the two.
talked about the two other things, but I'm
Okay.
fine.
You're fine with that. Okay. And Mark, let me just poll you. How are you on the supermajority? Is that an adamant issue for you, or
I would like to see it go back to majority, but if the rest of the board or if 4 of the other, not 4, what?
Oh, we're only at
3.
Yeah.
If other board members said, no, leave that in order to get this passed, leave it the way it is, but define what supermajority is, then okay, all right.
Okay. And you're fine with the other amendments?
I'm fine with the other edits that Alina has recommended.
Okay.
Yes. Yes.
So I think where that leaves us is I am fine with this. I'm fine with the amendments that Alina suggested and defining supermajority as 4 of the 5, having that explicitly put in there. But as I read this, Bob, if you're voting no and Alina's voting no, and Mark and I, if we vote yes, then we're not getting there.
Right.
So unless, Bob, you're willing to vote for this version of it, which includes the supermajority, it's putting you in a very interesting little paradox here. Otherwise, this won't, there's no reason to even make a motion on it tonight, and it'll be, I guess, pushed forward. Unless, Gage, if you had any suggestions, I think we're open to it at this stage.
I wish I had a clear legal reason to tell you you need to do one thing or the other, but ultimately this, these final points are, it's a policy decision for the board.
Okay.
I will say I do think it's probably wise to define the supermajority if that's what the board decides to go with.
Do the numbers.
Okay, thank you. Doesn't hurt to define. All right, so given where we are, Bob, you're in the interesting position of deciding whether you want it to pass in the as proposed way with amendments from Alina, and keep the supermajority as defined as 4, or we let this go another 2 weeks or whatever.
To have another board member here.
Well, I mean, I did hear that everybody wants to take this off the table.
It would be nice.
Yeah. So, I mean, I'm also sensitive to that. I also don't want to have any more staff time spent on this as well. So, because it has gone on a long time. So I will move to adopt the presented San Lorenzo Valley Water District. Well, have we gone to public comment yet? Sorry.
Not yet.
Well, there is another alternative that we just move it to the majority. You won't vote for that?
No, I won't. I feel very strongly about the supermajority.
And I definitely will not vote for that.
Yeah. I guess, yeah, let's, are there any public hands up? None. Okay. So Bob, please continue.
Yeah, so just for the purpose of getting it on there for a vote, I'll move to adopt the presented San Lorenzo Valley Water District Board Policy Manual as the official governed document of the Board of Directors.
With
the friendly amendments as outlined.
Right, including a supermajority defined as 4 of the 5.
Yes, correct.
I will second that.
President Russ,
Yes.
Vice President Lane,
No.
Director Smalley,
Yes.
and Director Fultz.
Yes.
Motion has passed.
All right. Thank you, everyone. That was a tough one. Uh, Done with it. All right. So we are, okay, we've already taken off 11A, right?
Yeah.
Right, okay. So unless I've forgotten something, we'll now move on to 11B. The customer appeal of a water usage charge.
That one.
Okay.
So this is an appeal of the $613.06 water consumption charge. This property was placed on the district waiver in January 23 after the residence was destroyed. At that time, the meter.
I'm sorry, I can't hear what's going on.
Oh, hold on, Sherry.
Yeah, and I apologize, Sherry. I couldn't hear anything that you said.
I'm sorry.
Maybe
I'm used to that.
just make sure you're speaking into the microphone,
Yep.
Sherry. Okay.
Are we good now?
Still a little faint. Can we bring it a little closer? Yeah, there you go. Thank you.
Better now?
Is it working? Because it doesn't seem to be
Screen. Yeah.
weird.
Maybe
Okay,
pull it really
go
close.
ahead. Go ahead. Go ahead.
But then you're singing.
I'm just gonna,
Oh, there you go. That's
all
better.
right, we're good.
Okay.
We're good. So this is an appeal of a $613.06 water consumption charge. The property was placed on a district basic waiver in January of 23 after the residence was destroyed. At that time, the meter reading was 1,125. During an inspection in February of 25, the meter reading was 1,159, reflecting 34 units of consumption. The meter at that point was then locked. When the account was reactivated and the meter was read again in June of 26, the reading remained at 1,159, so there was no additional consumption that occurred. The customer disputes the charge based on the property being vacant and unoccupied. The district cannot determine the exact cause of the consumption, but the meter history supports the charge, and the terms of the basic waiver do not allow water to be obtained through the service connection during the exemption period. The general manager denied the dispute, and the customer submitted an appeal to the board. Staff recommended that the board deny the appeal and uphold the general manager's determination.
Thank you for that summary, Sherry. I just want to, because this is an issue of only a few $100s, which is very important to any given customer. I get that. I just want to go over a couple more facts to the board before we hopefully conclude this. One is that just for the 613 was determined by billing all 34 units as though it occurred in 1 month. So most of these charges are tier 2 and tier 3 charges. Tier 3 is $19 and change compared to, excuse me, tier 1, which is $10. And if you were to assume a small leak over that 2-month period, it would work out to less than 1.5 units a month, which is obviously all under tier 1. And I did confirm that after the waiver period was over, they did pay the fixed charge every month. So the only real issue in my mind is the 613 and what's an equitable way to handle that. I would just like to propose that we rebill them, assuming only tier 1 and not the higher price tiers. That probably works out to about $300. But that's just my suggestion in the interest of time. But let's open it up for other comments from other directors. Bob?
Yeah, I did have one question which relates, I think, to our process, and that is when we put somebody on the on this non-use status, do we go out and turn off the curb stop and lock it?
No,
Why not?
I don't know at the time. I mean, obviously it would be turned off now, but I don't know why it wasn't done then.
I've seen in my neighborhood, I have a faucet up near my meter, and I've seen in my neighborhood where I know people have taken water from me without my knowledge, particularly during construction. I I'm uncomfortable with the notion of us not ensuring that no one can steal somebody's water or that there's a leak that goes undetected because people aren't living there or what have you. And I think the district needs to step up and make sure that when somebody goes in that status, we shut off the curb stop, we lock it, and it stays that way. That way, there's absolutely no question about whether or not somebody's using water. And so for that regard, I was going to come in and basically say, hey, let's cut this bill down way down in order to move this along, given the fact that we did not take that step. Bob, I'm okay with I was even going to take it down to like 150 or 200, but I'm okay with your proposal.
All right. Thank you. Mark, please.
Yes. I didn't have any questions about this based on the information presented. As to the suggestions that we're hearing from Bob and Bob, I like what Director Russ is suggesting because it does have some basis of procedure to it. Or rather than we kind of picked an arbitrary amount. If we settled that this was all used or however at a tier 1 rate, bill it at that, there is some reduction in this, and maybe it's a $300 bill or maybe it's a $350 bill, but there's a precedent there that should this ever happen again. I also like Director Foltz's suggestion of lock it out.
Yeah.
Lock it out in the future.
Right. That should be part of the procedure.
It should be part of our procedures. Yes. So,
all right. Thank you.
That's my thought on it.
Okay.
Yeah, I would just echo Director Smalley. I agree, lock it out, and I like the tier 1 charges to reduce their bill a little bit. Because I mean, I don't know, it could have definitely been a leak after the fire, and
Easy. Over 2 years, yeah.
yeah, I don't know, and maybe there was a spigot working and they used it. It is also a possibility too, but we don't know. So yeah, I think just billing at a tier 1. So
Okay. All right, then I think what I'm hearing is this actually require a motion?
He did dispute the
Yes.
bill.
Okay, so I would move that we rebill.
Public comment.
No,
Oh, thank you. No, any public? Thank you, Scott. Thank you, Jason. All right.
Bob, if I may suggest,
Yeah.
I think we do need to take formal action on the dispute. I don't, Gage might want to weigh in on that, whether we accept or reject it. I guess my only question is, I think we reject it and then we basically rebuild them at the tier 1 rate.
Yes, that sounds correct. Jason, any thoughts on that?
I was gonna have Gage if we can make a motion to amend his, but it seems like he just disputed the bill. We either accept it or reject it at this point in time.
I think you can reject the full waiver of the bill and instead offer what your proposal is, rebill at the tier 1 rates. So you can do it in one, it's one motion.
One motion, okay.
Yeah.
Okay. All right, then I would like to move that we reject the requested amount, the 613 and change refund or bill, and rebill him at the appropriate tier 1 price of, I believe, $10.23 per unit for the 34 units that we had metered and measured.
And if I can make a friendly correction, we're going to deny the appeal.
Yes.
Is what?
Yes.
Right. So we're going to deny the appeal instead of.
That's right. And deny the appeal, but rebill at the tier 1 rate.
Yes.
She
Okay.
gets it.
It's a bit of an academic point, but you can do it the way you just did it, or you can partially grant the appeal. But I don't know that you have a specific amount that you're granting a waiver of. So I think the method that you're choosing,
I think the easiest.
yeah, is appropriate.
Yeah.
Okay.
I'll second that.
All right, Leah, please.
President Rust,
Yes.
Vice President Lane,
Yes.
Director Smalley,
Yes.
and Director Bowles.
Yes.
The motion has passed.
All right. That's great. Thank you. So 11C looks like some really good news. Still on track for good news?
Yes,
Okay.
wastewater update.
All right.
All right. In February of this year, the district contracted with Essential Operations to provide oversight, monitoring, staff training, and engineering support to address the challenges facing the Bear Creek Estates wastewater system. Since then, district staff has worked closely with Essential Operations to implement a number of system improvements. The most significant achievement has been the district's ability to consistently meet the regional control board requirement of 50% reduction in total nitrogen since the beginning of May. In addition to improving compliance, Essential Operations have helped optimize treatment process, improve system monitoring, and enhance overall plant operations. While these improvements have been substantial, the system continues to face challenges, and there is still significant opportunity for further improvement. Looking ahead, staff will continue working with Essential Operations to develop a comprehensive maintenance program that will enable the district to effectively maintain the wastewater system after the Essential Operations contract expires. Additional objectives include implementing automated sludge pumping to improve operational efficiency and reduce staff time, as well as conducting a comprehensive inspection and evaluation of the leach field and collection system. These efforts will provide the information needed to develop a long-term capital improvement strategy, allowing the district to prioritize investment that improves system reliability, regulatory compliance, and overall operational performance.
Fabulous.
And that's all I have.
Yeah, that's great. And
we'll
his
wrap up here too.
yeah, no, that's amazing. I did just want to ask you, I guess there's the whole contract we had approved for Essential Operations was 2 years, right?
It's with an option.
With
1
an
year
option,
a
that's
second
right,
year.
right. And so it's been 2 or 3 months now, or
About 5 months.
5 months
We
already?
hired him in February, yes.
Okay.
We started in February.
Okay. So this, and I forget his name, but what he struck me when he was talking with us, I guess 5 months ago, was that he definitely had acquired over the many years of his experience, just kind of how this works, like a schema. How much of that do you think you've been able to absorb by osmosis? I mean, I know you've been on a steep learning curve.
Yeah.
And do you feel like you're really starting to get sort of why he makes different suggestions, or?
Yeah, no, he does a good job communicating every change he's made. We typically have our staff out there makes weekly visits.
Okay.
So we usually typically have our designated staff. We have a couple of people who are kind of taking the lead on it. I'm not going to say once he leaves, we're just going to know it all, but
right.
It's definitely been a really good learning experience.
This graph is actually the learning curve.
Yeah. In regards to the nitrogen reduction, he explained to us, it's all about recirculation. So outlined in my memo, but made a lot of changes to the recirculation pumps.
Right.
Switching them out, changing the times, the levels, of all sorts of different changes. So, maybe if we start seeing an issue with our nitrogen reduction, first thing we're gonna look at is, our circulation, make sure that looks good.
Okay. And I guess I'm also assuming that not only are you getting up the learning curve, but all the staff is. So, it's always important to train other people,
No,
right?
absolutely.
So,
I mean,
yeah.
I've been out in the field a few times with them, but we do, like I mentioned, we have a couple guys in our treatment department that they're typically every week he is there. And then even he gives directions to these guys, gives to me and them, and I direct them to go perform this.
All right. That's fantastic news. Thank you. Appreciate that. Mark?
The changes that you're seeing done, are those being documented?
Yes. Yeah,
Okay.
absolutely.
Here was the condition when I saw this on March 2nd. Here's the changes that we're making.
Yeah.
Okay. So that we can go back 2 years from now and be able to look at that.
He provides every few months. Now it's 2 months. 2 months in, you provide a second one, a list of the date and what he did. If that's what you're asking.
More than what he did, but here was the condition that I saw here's what
Yeah.
I recommended that we do in response to that. So that,
Yeah, I think a good example of that are the trickling filter screens. They weren't being maintained properly.
right. Okay.
And that was listed, that was documented that they were basically clogged.
Okay.
And he's
Okay.
he's directed us to clean them on a serious,
Right.
and that's going to be empty. I've asked him to give us, when it's all said and done, a maintenance plan. So that will be outlined.
Yes.
Exactly when do we need to clean those screens, or what conditions trigger those screens.
Okay. Okay. And then good news on this 4 successive samplings with a 50% reduction. But how much of this is weather related?
That was my question.
Have we seen this 4 in a row in past summers?
No,
we've
never seen 2 in a row.
Never seen 2 in a row. Okay.
We started 2000. From years, researching it. I understand you. We've never seen 2.
Okay. All right. Well, 4 in a row is significant.
This did start 26 years ago.
Yeah.
So.
Okay. All right. Good.
Good.
Yeah. Okay.
Bob, I assume you're still online. Any questions?
Yeah, I'm still here. No questions, but Jesse, thanks for really staying on top of this. I mean, your leadership in this area has been exemplary. And I know the Bear Creek Estates people are going to be appreciative of this because the options that were presented to them for replacing the system are simply unaffordable without moving to something other than what was proposed. I am, of course, fingers crossed for this winter. If it's a wet one, like their long-term forecast says, it'll really test what's happening on the ground there. So keep it up. And I don't know about reporting back what the board may want, but I would definitely want to have you bring this back at some point when we're in the rainy season and see if we're still getting the same results.
Yeah, thank you.
All right. Thank you. Alina?
Yeah, my main question was what the weather related as well. So I hope we continue on this trend as we get into the rainy season. But I'm really happy with the results, and I was reading it and I was like, "Woo, Jesse!" I'm just very excited. So thank you so much for your hard work on this, and I think that the money we spent on him was well worth it to hire him to help out with this issue. So thank you.
All right. Thank you. If there's no other comments from the public.
I do have one based on what Director Foltz said about the residents being, are any of them aware of this yet?
No.
Okay. In
Well,
particular,
unless they check the agenda now.
In particular, Stacy.
Yeah, that's we'll reach out.
Please, you've got some good news. And there's
That's
a small contingent there that we should be sharing with. Yes, go let them know.
Okay, you're right.
Right.
Okay, good.
Okay.
If no other comments from the directors,
No.
anybody online?
No.
Okay. No. No. Okay, great. All right. Thank you very much for that bit of good news. All right. So now we move on to the telehandler forklift. Okay.
All right. Excuse me. The purpose of this agenda item is to request board approval to purchase a used telehandler forklift. This purchase will improve the district's ability to complete both in-house capital improvement projects and day-to-day operational activities. The telehandler will allow staff to safely unload and move heavy, oversized materials, navigate rough terrain, and access elevated work areas. These capabilities will enhance productivity while improving worker safety by reducing our reliance on equipment that is not designed for these types of tests. This equipment would be used on several current upcoming capital improvement projects, including the North Highway 9 Bridge Replacement Project, the Harmon Street Main Replacement Project, the Pump Station Fire and Hiring Project, the Peavine Pipeline Project, and the Railroad Main Replacement Project, as well as future capital improvement projects and routine maintenance activities. Based on the anticipated use of this equipment, the projected cost of renting a telehandler would exceed the purchase price within 3 to 5 years, making ownership the most cost-effective long-term solution. Staff obtained multiple quotes for used telehandlers and determined that the 2018 SkyTrack from United Rentals provides the best combination of condition, capability, and overall value. Staff also researched the cost of purchasing a new telehandler, which is estimated at approximately $160,000 to $190,000 before tax and delivery. Based on this evaluation, staff recommends that the board approve the purchase of the 2018 SkyTrack telehandler for the total price of $73,584.
But you're asking for 80 just to give you some wiggle room and
Yeah,
things case change.
when I submitted the agenda item last week, this piece of equipment wasn't locked in. Full transparency, it is now locked in. It's actually being delivered tomorrow. Whether we're running it or buying it is going to be decided tonight, but
I see.
It's locked in.
Okay.
We're going to deliver on Thursday of 8-inch ductile iron for the North Highway 9 Bridge project, and we don't. This is equipment we need to unload it.
Okay. All right. And I was going to ask just a general question for reference. What would it? What is the weekly or monthly rental?
Yeah.
Yeah.
It's about, if you include delivery and pickup and then tax, it's about $1,300 a day, $2,600 a week, or $4,800 a month. And this was just one quote.
Okay. So about 5,000 a month. Okay.
I project, in a 12-month period, we're probably going to spend about $15,000 to $20,000 in rental if we were to go down that path. So that's where my 3 to 5 year number came.
Okay. Thank you. That helps. All right. Let's open this up to some other questions. Mark, comments?
Yes. So at $5,000 a month of rentals, because to have it for anything less than a month, probably not. What other projects in this next year are we going to use it for?
Yeah.
And then we would need it a month and a month and a month, or no, we need it because typically on these projects, I would expect we're unloading a significant portion off of a truck. And from there, if we didn't have this, we're picking with, single sticks with a backhoe or something like that, typically.
Yeah. I'll go through the project. So for the North Highway 9 Bridge project, we're going to be using it for the first delivery that's coming on Thursday.
Mm-hmm.
We're going to have a second delivery, at least one more delivery for epoxy pipe that has a farther lead time. So and then there's a good possibility we'll be using it actually on the job site to actually facilitate hanging the pipe on the bridge.
Okay. And are we doing that work internally?
Yes.
Yes.
Okay. So that's self-performed.
Yeah, I think, the bigger picture is we are committed to an in-house construction crew. We've already committed this. And I think this investment just kind of reflects that. Or it does reflect.
So continue with other projects.
Yeah,
I assume
keep going.
Peavine
So
is.
the next one, Harmony Street project.
Yeah.
We've getting close to purchasing the parts of that. So probably 2 to 3 weeks, we'll be using it again. And then once we start getting into multiple projects, we have a limited size yard. There may be an incident where we're jumping from project to project, so we're going to need it to move some material out of the way. But continuing on the pump station fire hardening project, this one will be used extensively for that. Just be able to work on the roofs instead of ladders,
right? Basically,
so. Peavine project, we know we'll need it to unload it on Crest Ranch. I'm assuming there's probably just one delivery, but there may be multiple deliveries there. That would be the only reason we would need it for that project. The railroad main project, we would need it for delivery, unloading delivery. And then as far as maintenance and operational duties, we clean our return basins yearly. We have 4 of them total. And this would turn a 3-day job into a 1-day job with the telehandler. One thing I didn't mention in the presentation is they're very versatile, where you can add a bucket loader to them. So it could replace some pieces of equipment, instead of getting the skid steer for this area, we could just get an attachment bucket.
Yeah.
Maintenance on our 2-story buildings and our tanks, just instead of working on a ladder. And then other future capital improvement projects that aren't listed yet.
Okay. All right. Well, I'm discounting Peavine from that list because based on the last discussions that we've had, I don't know when we're gonna.
I hope within the next 12 months we get delivered.
Okay, I hope within the next 12
sure,
months.
hope so.
All right. Yeah. Okay. And I did say within the next year, right? Okay,
I don't, yeah.
okay. All right, those are the questions that I have on the rent versus buy aspects. Okay.
Alina, any thoughts?
I mean, I really like all the information that you provided in that to make this, you know, a clear decision. And I kind of in my head, even if we get to a point where we don't need it anymore, I'm sure it's resellable. And so you're spending all that money on rent that you wouldn't get back. You could recoup some costs on this, but it sounds like it's really useful and something we would probably keep, especially keeping people off ladders and stuff like that. So. Yeah, I don't really have any questions. I think it was a really good write-up and you provided a lot of information, so thank you.
Thank you. Bob, thoughts, please?
Yeah, I've been a consistent supporter of investment in all kinds of tools. And in fact, sometimes I think the operations team hasn't come to us with enough requests for capital expenditures, going back to the vac truck and the like. Including technology. So please keep it up on that. My only questions about your analysis, and hate to be a finance nudge, but did you include the cost of maintenance in your, not maintenance of our facilities, but maintenance of the equipment in your analysis?
I didn't. They're pretty loose numbers, so I didn't include the maintenance.
Okay. Look, I think that you probably need something like this, regardless of whether or not you can justify it on a payback of 3 to 5 years, given the delays that are associated with getting the equipment up here. I'm assuming this is transportable. I mean, I looked it up. I think you can drive it on roads and streets, right?
Yeah, it goes about 20 miles per hour, so it's similar to driving our backhoe around. Yeah.
Right. And who's the guy that gets to drive it? Can I?
A lot of our guys, I'd say, our construction man, our supervisor Ben Beasley would be, take the lead on it. But we have a lot of capable guys on staff that handle it.
No
we
doubt.
actually rented one about a month ago for the Echo Tank project to move the temporary tanks. And
right.
I believe it was Don Long and Ben Beasley who operated it.
Yeah.
They were special.
So anyway, so the message here, at least from me, Jesse, is tools like this, buy them. Absolutely. Bring them to the board if you need to.
Thank you.
Great. Thank you. I also think this is a good buy, especially I think considering Alina's comment that it's not like it's going to be worth zero. It will have a fairly good salvage value. And so even if you valued it at half of its value after 5 years or 4 years, that still works out to $10,000 a year. So that's 2 months worth of use per year. And that's a pretty good trade-off. So I would be in support of this too. If there's no other board comments, we'll go to the public. No, okay. Who would like to make a motion? Ready?
I can do that.
Okay, great.
I'll make the motion that the board directs the general manager to purchase a used telehandler forklift for an amount not to exceed $80,000, including applicable taxes and delivery, and approve a budget amendment to the fiscal year 26-27 capital improvement budget in an amount not to exceed $80,000 for the purchase of a used telehandler forklift.
Second.
President Russ?
Yes.
Vice President Lang?
Yes.
Director Smalley?
Yes.
Director Fultz?
Yes.
Motion has passed. Thank you.
Great. All right, thank you. That's great. Appreciate that, Jesse. Good presentation. All right, now, Jerry, you're up to bat. It's karaoke time.
Okay, so this is the investment policy. We are required to adopt a resolution every year for the investment policy. I took this to the Budget and Finance Committee on July 8th. I was not recommending any changes. They did recommend a small change of adding what cannot be invested in. And so I have added that, and now I'm asking for your approval.
Okay, thank you. Mark, would you like to make any comment?
Sure. The policy references the district manager and should be general manager instead. And in the resolution itself, in the third whereas, it states has conducted an annual review of the policy and determined that no revisions are required at this time. But clearly, we're making
You're absolutely
So
right. I wrote
the-
this before that meeting.
right, and determined that no revisions are. So strike that and determined from the resolution.
Okay, good.
Okay, those are the comments that I have.
Thank you. Bob, any thoughts?
Yeah, I do. And Sherry, I appreciate the effort you went into and coming up with a list of prohibited investments. And you know, given the friends that I have in the financial community, you know, they're always coming up with stuff that's you know, new and exciting, right? I would be much more comfortable if you really have to have something in there about prohibited investments, simply saying all investments other than those listed above are prohibited. And that would basically give us the ability to not have to try to keep up with, you know, this kind of weird security versus this investment versus this derivative versus whatever. I just don't think it's feasible to do that kind of thing. Though I did appreciate the comprehensiveness of what you put together, and certainly would encourage you offline from the policy to make sure that none of our investments fall into that category. I don't know if anybody else on the board has the same reaction, but I just generally don't like complexity when you can make it simpler. Everything other than what's permitted is prohibited.
Yeah, no, appreciate that. Alina, did you have any comments on the investment policy?
I don't have any comments.
Okay,
No.
Mark, you had a follow-on comment?
I had a follow-on comment based on what Director Fultz is saying. In particular, that under the prohibited investments, derivatives or leverage investment instruments, including futures, options, swaps, forwards, caps, floors, or collars. That to me is techno or finance speak that I don't know what, but I expect anybody within finance does. But to Director Fulton's point, well, they're going to come up with a different word to call the next product that basically falls within this. And well, it's not one of those. It's not a floor, but it's a mid-level. Call it something else different, and yeah. So to the point of the permitted ones, anything else? No. Or anything else needs to be brought to the board. Yeah.
I like that idea. It's one less thing that I have to update every year, so.
Yeah.
Exactly.
And add the next levels of things that they've been creative to come up with. Doesn't meet our policy. Yeah.
I can definitely make that change.
Good.
Yeah, I like that change too. I think that's, I like simplicity too, Bob, so thank you. Let's see, so I don't have the motion in front of me. Does anyone else? Let's see. Here we go.
Well, I move to adopt resolution number blank. Approving the San Lorenzo Valley Water District investment policy for fiscal year 2026-27 with the modification to replace the prohibited, excuse me, let me get to that, to replace the prohibited investments list with a line that says all investments not permitted are prohibited. Or excuse me, not all investments not authorized and acceptable are prohibited.
I will second that motion.
And if I can make a friendly amendment to that. And other modifications as discussed during the. Okay.
Right. District manager.
Yeah, right.
Okay.
I don't want to call them out.
Yeah,
Right.
no, Mark, thank you. That's absolutely acceptable.
Yeah. Okay. All right, we're ready for a vote.
President Russ,
Yes.
Vice President Lang,
Yes.
Director Smalley,
Yes.
and Director Fultz.
Yes.
Motion passed and the resolution will be adopted.
Thank you much. Okay. All right, we're on to accounts payable. Okay.
All right, so this is the accounts payable listing for the period of June 6th through July 16th for your review and approval.
40 days worth, and what is it, over 200 checks?
We're busy in finance.
Wow. That's amazing. Okay. Let's see. Well, I learned a lot of very interesting things looking at these, and a lot of them have been answered. But I did have a question about the solar loan payment. I didn't know that we were financing
Yep.
solar anywhere in the system.
Felton plant, water treatment plant. There's solar.
Well,
on the
but
side.
to the tune of 3,000 a month in principal payments, that seems really high. Do you happen to know what the total original installed cost was and what the maturity and all that?
It should almost be done, Bob.
Oh, I hope so.
It
It was
is
a while ago.
So
Okay.
it was 325,982 that we borrowed.
Wow.
At an interest rate of 3.67. We are paying about 3,300 a month in principal and roughly the same in interest.
And when does when is it mature? When is the final payment?
November.
Oh, wow. Wonderful. Okay. As an aside, I'm just really curious if we've also been tracking the corresponding, I'm assuming the NEM 2 net metering credits that we've been getting. It would be very interesting to just compare how much have we earned over what, 15, 20 years compared to the total that we paid out, which is probably close to 370, 380, right? So that's just a question for a future point of interest. It's done. I'm glad to hear that. That's great. Okay.
That was definitely not part of the discussion back then, Bob.
No, I guess not. Yeah, it was 15 years ago?
It started 10 years ago.
10 years ago. Oh, okay.
16.
Okay, thank you. All right. That's it for any of my questions on accounts payable. Alina, did you have any
No.
questions? Mark?
Nope, I don't have any
And
questions.
Bob, any questions, comments?
I do have to comment on historical stuff, and bear with me. So accounts payable got stopped being approved by the board back when one of the board members got into a conflict of interest lawsuit, and it was the board was advised at that time by the then general counsel not to approve accounts payable so that there could be no conflict of interest issues associated with board members voting on things that they had an interest in. And so that's why it was stopped. There have been a lot of us that wanted to bring it back. And Jason, my question for you is, or Sherry, my question for you is, going forward, are we going to see this every month? And
Yeah.
that is a really good thing. And I'm glad that you're doing it. It is a best practice that boards should have been doing. And it really did take a change in leadership to bring this back. So thank you for doing it.
Yeah, well, to answer your question, yes, we are.
Excellent.
Yeah, I certainly appreciate it. Any other comments from other directors? No, anybody in the public, Scott?
No.
Okay. I think this is just for information purposes, right?
It does need to-
No.
I'll make the motion to approve the accounts payable listing for the period June 6, 2026 through July 16th, 2026.
I'll second it.
President Russ,
Yes.
Vice President Lane,
Yeah.
Director Smalley,
Yes.
and Director Foltz.
Yes.
Motion has passed.
All right, thank you. All right, our final new business item, 11G, on the rate assistance program, amendment.
So this is done because in the past, when the resolution and the policy was adopted, what the language that was stated at the board meeting was that it was going to increase by $5 a month going forward, with an additional 30 customers that could be qualified for the rate assistance program. But that language was never adopted in the policy itself. It didn't say that with $5 a month going forward. So this resolution and new policy are to memorialize that, to make sure that that's what the intention of the board was, and to make sure that the policy and the resolution align with it. So with that, I'll turn it back over to the board.
Okay, thank you. Bob, do you have any comments on this amendment?
Well, I've not been a supporter of the rate assistance program in the current form because it really is up to the state of California to fulfill its obligation to fund the water as a human right legislation that they pass, which they've never done. We're too small a community to be able to deal with this, particularly given that there are interests in the valley that would like to see 100% of our property tax money applied to rate assistance, which of course would take away from infrastructure. I'm concerned about the annual $5 increase with no caps. So at some point, this could be looking to take up a sizable portion of the discretionary cash that the district has that it needs for infrastructure. I would caution future boards against doing this in perpetuity, because after 10 years, you're basically looking at what, $75 subsidy for people that qualify for rate assistance. I think it's somewhere in that area. So this is just bad policy all the way around. Our efforts really need to be directed at the state for those kinds of subsidies. So for that reason, I will oppose this, as I have with all of the rate assistance programs that have been offered in the past.
Okay, thank you. Mark?
Yes. When this was discussed previously, it was not my understanding that this $5 was an incremental every year, and another $5. At $5 a month, 12 months, 146 customers, we're looking at almost 9,000 a year that this program then is escalated every year. It was not my understanding that that's what we were doing. So
that's what it says.
And maybe that's the reason for the clarification.
Maybe
What
that's
what
the
is
reason-
our intent?
Maybe that's the reason for the clarification. Yes, it was not my understanding that that's what I thought we were doing this as a one-time $5 of an increase.
Well, according to the resolution, it's based upon the budgeted amount, and the budget amount for this fiscal year that we're in now allows for $5 more from the one that you already approved last, budget cycle, 26.
Okay. So
staff is assuming that it went up $5 here, it was going up $5 here. It's just going to be a continuing thing.
So maybe it should be tied to what budget we approve.
It is. It says according to the approved budget of the board.
So if the budget doesn't support an extra $5 2 years hence, then
it's up to the board. Like, we will bring the budget back. It's up to the board at that time to say what amount they want to approve for the rate assistance program.
Okay. I think that this should be brought back to a board on an annual basis then to discuss this item in its essence, not just this escalator that an automatic escalator that just is forgotten almost and is just automatically escalated. So I want a future board to say yeah to this or no to this.
And maybe the way to look at it is the budget, we have a 2-year budget. And so maybe we put numbers in there in the 2-year budget. And then the next budget deals with whatever rate assistance changes would occur or increases would occur at that point.
Give me in the policy and in the resolution that it has to be reviewed and approved every budget cycle.
Every budget cycle. I think I would be up for something like that myself. Alina, what are your thoughts?
Yeah, I don't think the intent was for it to escalate when it was approved. I do agree with that, but I like it. I'm okay with it. I think that it's something that we should be increasing as costs increase to be able to help these low income people out, to be able to afford their bills. So, yeah, I'm okay with it continuing to escalate.
And I will say that for this budget, this fiscal year, there is enough money to cover the $5 increase budgeted. This is the budget that was approved back in June of 25.
Okay. And when the rates have gone up again, correct? Because we hit another.
Yeah, it went up
bump.
on January 1st.
Yeah, and so that is the whole idea that we would, as rates go up, we would increase this. Yeah, I'm okay with upping it if we have the money right now to be able to help low income people.
I guess what I'm hearing is maybe what we do is approve the $5 bump because that is covered within the current budget, but that we, as a policy goes for the rate assistance program, is that is a every budget cycle we then determine what the appropriate budget for the next 2 years would be, and if that's $5 a month, that's great. If it's $3, let that board decide. That would be my proposal. What are your thoughts, Bart?
I don't want to go ahead with this the way it is. I want the board to, and I'd like to have 5 of us here because I don't support this to continue. I thought we were doing this as a one time for that year when we did it, and it wasn't. I wasn't, thinking of the 2-year budget cycle and that it was increasing it from $20 to $25. Simply that. So if you want to lay out a structure for me that's different than that, I think bring this back then and let us.
Would you be open if staff proposes a structure that's based on a budget cycle, or do you really prefer it to be reviewed by the board every year?
I think every year. I think that's my thought.
I'm okay with, and Shuri and I have talked about this, going on and changing the budget cycle to every year, every fiscal year.
I like it. Okay. All right.
Review it every year.
Yeah.
Okay, so
because I don't want my vote on this, if it was yes, to perpetuate for the next 10 years. That's what we're setting up.
Well, that's what this is written as.
That's the way this is
written. But we
written
can
right
also structure it to be only on a budget cycle.
Right. I think
in which case
yearly.
it's 1 year or 2 years.
Right. And that's where the confusion came from, because when I read the policy, it kind of led me to believe that it was $25, but then you go look at what the budget amount was, and it's enough to support $5 more.
Right.
Yeah, you're right. That is confusing.
Okay.
So, so do you want to take this back and just rewrite it for a budget cycle? Is that the easiest thing?
I can do that.
Okay. All right, let's do that. All right, and then we can discuss it at a future board meeting.
Is it the understanding that's still $25?
It's my understanding. But I don't know what everybody else's understanding is. That's my understanding.
I remember the meeting. It was definitely only supposed to be a one-time increase.
Okay. All right, thank you.
That's my recollection too.
Okay. And I do note there's no motion in this memo. Okay.
Right, so, yeah, so no motion. Okay. All right, so I guess, we now can see, if there's any, comments from, directors on the previous board minutes from
Oh, you
July
got a
2nd.
public comment on that last one?
Oh, thank you. Scott,
No, sir.
okay, thank you. All right. Are there, I'll just leave it open to any director if there's, changes or edits that would be suggested for the board minutes from our July 2nd meeting.
Nope.
Unanimous consent.
And
Yes.
unanimous consent. Okay, good. All right, and that was nice. And then district reports. Okay. All right. Any comments on that or questions? Bob, do you have any comments?
Well, the one number that I'm looking for, I'm waiting for the 6:30 report. So I guess that'll be next month to see if the 6.5 million number has been hit. That is our first basic milestone for meeting our financial planning goals.
Okay. Mark, any,
I don't have any comments on it.
Alina, any comments? All right, I'm good as is. So thank you, everybody. I think we are also unanimously approving that then. Oh, any public comments? No. Okay.
No
Uh,
approval needed.
okay. Oh, that's just
It's just
report. Okay, very good. All right. Thank you, everybody. I think that wraps it up for tonight. Appreciate everyone's time.
Thank you.
We
Thanks,
adjourn.
everyone. Have a good night.
Good night.